Welcome to ForexTV.com. Today is Wednesday, December 17th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar makes sharp falls to the euro. And now for a look at the latest headlines from the CEP News Desk. The U.S. current account deficit narrowed in the third quarter compared to the second quarter. The third quarter account deficit totaled $174.1 billion. Details of the report showed overseas purchases tumbling dramatically, while investments into the U.S. were heavily concentrated into Treasury securities. Inflation in the Eurozone was confirmed to have slowed to 2.1% in the 12 months to November, down an unprecedented 1.1% from October's annualized rate of 3.2%. On a monthly basis, the Consumer Price Index contracted 0.5% in November, in line with preliminary estimates following October's flat reading. The Canadian wholesale sector fell in October as total sales fell 1.8% from the month before. The decrease was substantially larger than negative 0.5% drop expected by analysts and more than unwound the 1.1% sales increase recorded in September. Today we are joined by Nick Bennenbroek of Wells Fargo. Hi Nick, how are you today?
Good afternoon.
Since the Fed's rate cuts yesterday, do you think the dollar will still be looked at as a safe haven currency?
Well, for the immediate future, most probably not. Certainly with the move to, let's say, quantitative easing or non-conventional measures, the dollar has been under significant pressure. There's probably some prospect for further weakness, perhaps towards the 145 level on the euro, is slightly higher. I think over the longer term, though, we don't see extended weakness in the U.S. currency.
All right, and we're seeing the dollar fall to all-time lows against the euro. Now, you said you're not seeing extended weakness in the dollar, but what's moving this pair right now? Is it the dollar weakness, or is the euro just gaining strength?
Well, I think from what we're seeing here, it is pretty much dollar weakness because we're seeing weakness against a whole range of currencies, the commodity currencies, for example, and also against some of the European currencies, at least, except for the pound. So it is primarily the dollar, and it is primarily a response to the Federal Reserve interest rate announcement from yesterday.
Now, stocks are down so far this morning. Was yesterday's climb, do you think it was just a short-lived relief rally or a dead cat bounce?
I would probably say, yes, relief rally is a good way to describe it. We definitely saw a very significant sentiment move or a reaction move, and really just a reaction to the announcement. The real effect in terms of what's going to happen to the economy, what's going to happen to equity markets, I wouldn't expect to see much follow through from the very sharp equity gains we saw yesterday.
All right, and in the overnight and this morning, we saw gains from both the Aussie and the Kiwi. Do you think this was similar to stocks in a relief rally, or do you think we're finally seeing a bottom in commodities that are pushing these higher?
No, I believe, definitely, I think it's definitely a story of reaction to the announcement, sentiment and relief, rather than any fundamental change. It's interesting, for example, when you look at the commodity prices, that oil prices today are lower, for example, and even the broader CRB commodities price index is only up very marginally. So despite the kind of news that we got yesterday, I think there's still going to be some trouble for the commodities sector, and I think Aussie and Kiwi will reverse these recent gains going forward.
Thanks for being on the show today, Nick.
Thank you.
This has been your New York Forex Market Buzz with Nick Bennenbroek of Wells Fargo. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.